And we're sort of at the tip of the iceberg and sort of really rethinking this idea of how do we trust people with our money?
Mm-hmm.
Due diligence tends to confirm our biases. And so really looking at the due diligence and how that might beyond sort of the legal prescriptions of what the give and take looks like. How do we come to trust people?
This is A New Angle, and I'm your host, Justin Angle, marketing professor at the University of Montana College of Business. This podcast is my chance to speak with cool people doing awesome things in and around the great state of Montana. We are proudly underwritten by First Security Bank and Blackfoot. Hey folks, welcome back, and thanks for tuning in. Before we get into today's episode, I want to take a moment to recognize the talent, contribution, and character of Aspen Runkle. For the last 2 years, Aspen has been tirelessly promoting A New Angle, using her bountiful creativity and hustle to push out engaging social media posts every week. She's been a critical partner in this podcast, and today we say farewell. Back in May, Aspen completed her Master's of Science in Business Analytics degree and has begun an exciting job in consulting with Bridge Partners. Aspen, we thank you, and we miss you, and we're excited to watch you do great things. And so, as Aspen moves on, I'll introduce you to AJ Williams. AJ is a graduate student in environmental journalism here at UM, and she's coming on as the first Consolidated Electrical Distributors producer. CED has long supported the show, and now we are able to channel their support to bring on an actual producer, someone with real journalism talent to help me professionalize the operation. So welcome, AJ. You'll be hearing more from her as we go. Okay, this episode is an important one. It covers a topic that you might not have considered. It's not difficult to find a lack of diversity and inclusion in many domains in our society. And one area in which the disparities are particularly glaring and undeniable is venture capital. It's essentially all white men. And that's a problem. Banu Ozkazanc-Pan is a professor of the practice in engineering at Brown University. She also directs the Venture Capital Inclusion Lab, a research organization working to educate VCs and policymakers on inclusion. She does cutting-edge research in this area and last year testified before Congress about her findings. It was great to chat with Banu, learn more about her work, and how some of the forces she's illuminating are affecting rural areas like Montana. I'm excited for you to hear from Professor Pan right now. Okay, so we're here today with Professor Banu Ozkazanc-Pan. Banu, thanks for coming on the podcast.
Thanks for having me, Justin. I'm excited to get to have a conversation on various topics.
Indeed, really excited to learn more about your work. I want to set the stage by letting people know who you are. You are an associate professor of the practice in engineering at Brown University. You also direct the Venture Inclusion Lab. Let's talk a little bit about your professional history. I mean, we're going to talk generally today about the topics of diversity and inclusion in the venture capital space, but maybe give us the quick picture of how you got into academia and why this particular field of study.
Yeah. And, it's so funny when I get asked that question. If you were to ask me 20 years ago if I wanted to be an academic, I would say, what is that? It was quite accidental. I was doing an undergraduate in psychology at Johns Hopkins. I really loved working with people. I had grown up pretty transnationally, so I was very interested in culture, getting to know different people, understanding their worldviews. I graduated and ended up working in a hospital setting with different kinds of, I would say, experimental drugs. I ended up in sort of this psych/psychology domain and really realized that many of the things that people were sort of suffering from were not individual, but systemic. And so that kind of was always bothering me, even though I was still working in a field of psychology. I ended up staying in Baltimore, getting an MBA. And at that time, I was exposed to more sort of theories about work and organization. I ended up having so many questions. One of my professors said, "You have too many questions. You're not going to be happy. Have you thought of a PhD?" And I said, "No, what is that? What does that mean?" And so it was really at that point that I considered a career in academia.
Sure.
I applied to programs, got into one that was very good for me at UMass Amherst in the Eisenberg School of Management. And I ended up getting a PhD with a focus on sort of transnationalism. And my dissertation was on entrepreneurs who do entrepreneurship transnationally. And so I did quite a bit of my research in Silicon Valley, the rest of it in Turkey, looking at people who travel to do entrepreneurship. And in the midst of doing that, it became very clear that in the space of technology entrepreneurship, I kept talking to the same kind of people, and they were mostly men, and they were mostly white. And it just kind of resonated with me to understand why it is that we keep seeing the same kind of people in certain spaces. And so the dissertation pivoted towards really trying to understand these issues. And once I graduated, I really was more or less focused on issues of diversity, equity, and inclusion in entrepreneurship, just trying to understand why inequities exist, how they exist, and if people even think of them as inequities. So that kind of ended up being a career that's been ongoing for about, 10 or plus years since getting my PhD.
Sure. And when you say most of the people you encountered in this tech entrepreneurship space, I mean, looking at some of the statistics you cite in your research, I mean, you can almost say all. I mean, it's overwhelmingly white men. I mean,
Right.
This is a moment in our culture where diversity and inclusion are especially salient, and for good reason. But as you sort of dig into this entrepreneurship space and the funding and how the money flows into new startup ventures, these are some striking disparities. I mean, you can't look at these numbers and in any way deny that there's a problem. So maybe paint the picture for us. What's the state of play with venture capital? And maybe before we get into some of the disparities, just sort of describe, when we say venture capital, what we're actually talking about.
Yeah, so we're really talking about the venture capital industry, which has multiple components, but it really is a way in which funding flows to high potential, high growth startups. And of recent decades, those have predominantly been clustered in the high tech industry. Although there are other industries where high growth and high profitability is possible. It's just we've really focused on tech as the way in which most investments seem to be going. So as an industry, VC has been quite dominant, although its origins are much more humble. Really, it's just a way to invest private money into potential companies that have an opportunity to grow at scale, and to even disrupt certain industries, although the language around disruption is new. There are multiple components to that.
Yeah, and so like you said, so much of the sort of public perception of venture capitalism sort of is centered in Silicon Valley and these big splashy tech startups, and we kind of have this, like what Scott Galloway calls the idolatry of tech innovators. Like these CEOs almost or these founders almost take on these sort of media character personas, but that's not where all of it's happening. Can you give us a sense for, both in terms of the numbers of startups that are getting funding, but also in terms of the dollar amounts of the funding? Like how is it kind of distributed across both Silicon Valley and then elsewhere?
Yeah, so currently the majority of funding is on the coasts, as you can imagine, the left and right coasts, the west and east coast, however you want to think about it. And still the majority of it is in the Silicon Valley area. I think right now the numbers are like 60% is in that area. The rest of it is predominantly in the New England/New York area. And everything else is pretty much scattered in the low teens to, the single digits across the US. So the middle is sort of this gap in venture funding. In terms of startups, it is actually quite rare to be one of these unicorns. So everyone who becomes one is pretty celebrated and well known. But in reality, there's sort of what we call the valley of death, where between the growth and Series A, a lot of high potential companies kind of end up going bankrupt, not having a feasible product, market match, so various reasons. And what we're seeing right now is that you'll hear this quite often, that the seed investment is where Series A was about a decade ago. And the Series A is where Series B was a decade ago. So when we talk about the VC industry, there's sort of this quote unquote linear progression of the amounts of capital that you should be getting at each stage, including sort of the seed capital, Series A, B, C, D, and above. And right now, what we're seeing at Series A, which is typically when you should have some revenue, we're seeing $1 million investments. We're seeing the growth of $50 million plus investments as being something normal right now, which wasn't the case. And it really kind of shuts people out who have these potential companies, but are simply getting left behind.
And so what you're describing there, does that mean the deals are getting bigger and kind of more concentrated, like smaller and bigger, or fewer and bigger bets? Is that kind of the picture that I can take away from that?
So the funds being raised are what we call predominantly mega funds, 500 million or more, and the investments themselves are growing also in size.
Okay.
They're not necessarily fewer of them. In fact, every year seems to be record-breaking if you look at Pitchbook data. And I can share with you some stats around sort of what that looks like for women as well. When
Please.
we say record-breaking for women, 2018 was considered record-breaking for women. And record-breaking for women means that women got around 2.4% of all venture-backed. So women-led companies got 2.4%
wow.
of VC money,
Yeah.
which means, 97.3, is that correct math? 97.6% went to, male-led startups.
Yeah. So let's talk about that. So like you said, you started digging into the space and the disparities are glaring, on gender. What other dimensions of diversity are you looking at? And can you give us a picture of some of those disparities and how they play out?
Yeah, so the other disparity that's pretty striking is obviously around race. And in the US, we talk about race. In other countries, race is not the way in which people categorize themselves. It might be ethnicity or caste or religion. But in the US, it's race, so we'll use that. And in terms of race, again, you see that around 80 to 85% of investors tend to be white and male. Investments going to Black or minority-funded companies tends to be less than 1%. And these stats really haven't changed, right, over time. So when I say that it's a record-breaking year, it's relative, right?
Sure.
So, funding right now for women is, around 2.3, 2.4%. And female-founded firms account for around 5.4% of all VC invested firms. For minorities, it's actually much, much less than that. The other problem we have is a lack of sort of consistent tracking and data gathering. So sometimes it's hard to figure out what those numbers mean and where we can get access to them if they're not aggregated consistently.
And so I'm trying to understand kind of where the problem starts and stops to some degree, if that makes sense. I mean, one of the things that I've sort of been tangentially involved in here at the University of Montana is through our Blackstone Launchpad colleague that Banu, Paul Gladen, led a group that got some grant funding from the Kauffman Foundation, who's funded some of your work, to look at these gender disparities in entrepreneurship in the state of Montana. And one of the things we found through some survey work is that women in general were much less likely to move forward at what we called the pre-idea stage. So it wasn't so much, it was many steps in the process before they even got to a funding decision or outcome. They just were less sort of willing, able, or interested in moving forward or with an idea, or less willing to say, hey, I do have an idea. So the idea expression phase was where we were starting to observe some disparities even then. Can you talk about sort of the process of of a startup and where some of these disparities are particularly problematic?
Yeah, so if you look from ideation all the way to execution and then sort of growth, including funding, there are some differences. And for me as a researcher, it's always interesting to understand the mechanisms that drive those differences. Are they differences simply based in biology? I don't think so. I think there are differences based in sort of some of the sanctioning that happens when women do express certain, growth aspirations
Right.
or have certain ideas. So on the one hand, I think there are differences, but I think differences are also embedded in social institutions. So what's acceptable? When was the last time we talked about a woman dropping out of college, becoming a successful tech entrepreneur?
Right.
That's not
Right.
the narrative. Often it is actually a very sort of this myth of this heroic entrepreneur who did not need college, but sort of survived on their own. And it's always on their own. Women in general know that there's a tempering to their ideas. So this is why they're also pitched differently, but are often told to pitch aggressively. So in the pitching, we expect a certain kind of performance that tells everyone the scale, the market, and how fast you're going to grow. And there's research that indicates that even during pitch contests, women get asked distinctly different questions around how they're going to mitigate risks associated with growth, how they're going to prevent certain sort of challenges that they're going to potentially face, where men are asked questions that we call promotion questions, right? Questions that say, well, how are you going to navigate this large growth? What are your aspirations to grow even bigger? So rather than sort of thinking about what might be different between men and women, I think it's also interesting to think about how we look at men and women and ask them certain questions with an expectation of how they answer.
Yeah, that's
Yeah.
really interesting in the sense that it kind of reminds me of a dynamic that often plays out with political campaigns. I mean, it's a system designed by men, mostly white men, or entirely white men, to determine who wins a political campaign. It largely rewards male traits, and what your traits is maybe not the right word, but male-oriented behaviors. And it sounded like in the pitch, the way the pitch system and expectations are constructed works very similarly.
Exactly. And I think this is where there's a bit of a nuance with gender. It's not men and women, it's also men who are not as masculine. Men who may present themselves as more feminine, they're equally sanctioned as not as competent. So there seems to be some equation of looking at people and how they react to questions and assuming a level of competence. And that competence sometimes is based on fake confidence. Women often will move forward if they're truly confident, whereas men we've seen will move forward because they believe in themselves, and that presents a sort of confidence rather than necessarily reflect their competence.
Sure. We probably believe in ourselves because we have these giant tailwinds pushing us forward. And another piece of
Right.
it too is like in these situations, and I don't know if you have data on this, but everybody on the other side of the pitch is probably a familiar looking white male, right? And so that has to create all these dynamics too. You're automatically otherized if you're female, you identify as a different gender, or you are of a different race, or whatever. You're already sort of fighting some tailwind or some headwinds there.
Yeah, and it comes in multiple forms. It could certainly be sort of this, well, gosh, nobody looks like me approach, but it's also often also related to are these people who are known to you through your network? And a lot of times the ones who get to pitch, regardless of, we're not talking about contests that are much more public. We're talking about those private meetings. Those tend to come through warm introductions and referrals, which means that you are already in a network that has access to these people. That is distinctly different across race and gender in the US. So we tend to have homophilous social networks, meaning that the people in our network tend to be like us. So when you eventually end up in a room full of investors, the likelihood of you getting there through your network is quite difficult, but you had to have gone through several different nodes of people to get there. So you're linked to those people from, multiple distances away, whereas traditionally, connections through alma maters like Ivy League universities, I think 40 to 50% of investors tend to go to those schools, as do high growth entrepreneurs. So there's that element, sort of the social network. And then there's also elements around, thinking through the ways in which the norms of the industry actually reward that behavior, because there's this notion that, well, others of you who came through the same pedigree did well, and there's a likelihood that it'll repeat itself. So there's this sort of false narrative that if we throw 100 spaghetti strands to the wall, one will stick.
Mm-hmm. Mm-hmm.
But in reality, we know that there have been some really poor investment choices in Silicon Valley.
Oh, yeah. And so talk about kind of how you approach this area of research. I mean, it sounds like, you're tremendously well-versed in the descriptive aspect. You can describe these disparities, and quantifying those has got to be a bit of a challenge in terms of research methods. How do you even sort of go about getting at some of these mechanisms that you talk about, whether it's analyzing the social network or other aspects? Kind of talk a little bit about your methodology and how you get into it.
Numbers are important because they provide the scale of the issue, but I like to understand why those numbers are the way they are. So that means a lot of qualitative research, including interviews, observation, ethnographic work, shadowing, and just real engagement with the people whose stories you want to tell. So for me to be able to tell you how these things are happening, it means that I spend quite a bit of time interviewing, observing, and engaging in entrepreneurial ecosystems to get a sense of how these different actors are relating to each other and how their experiences are taking shape. And what that also means is that when we do an ecosystem analysis, we can sort of say, hey, I'll use the example of Boston. Boston is such a resource-rich place. There's so much opportunity for networking events, platforms, educational opportunities around entrepreneurship, panels, discussions, workshops, paid programs, free programs. There's a plethora of investments, and there's actually also policy support. Boston's one of the few cities that has a women's business and entrepreneurship support office within the city. So, that is a fact. But it's also a fact that there are multiple different ways in which people can or cannot access all these different parts of the ecosystem. And in order to tell that story, you have to have sort of what I call a different kind of lens for understanding an ecosystem. And for me, that's a gender and race lens. It's a curiosity that says, well, how might these issues make a difference? And that's sort of my starting point. It's sort of a curiosity around how come in an ecosystem as quote unquote rich as this, there are distinct disparities that are ongoing. Why does that happen? And sometimes it's in these nuances that you pick up how those disparities happen and continue to happen.
A New Angle is brought to you by First Security Bank and Blackfoot, two cool companies doing awesome things all over Montana.
Hey, this is Jeff Petticord, and you're listening to A New Angle.
I can share an example with you.
Yeah, that'd be great. Yeah.
Oftentimes a startup that's tech or, in the tech sector, it'll start with a couple of guys who have a good idea for tech-enabled something or other. And when they want to grow, they look to those that they trust and they know. And that tends to be people in their social network. That also tends to be men like them. And they grow and grow. And at some point, they get to a point where they're being invested in. And the investors tell them, there are these things you need to do to grow. I had an opportunity to talk to a company that kind of went through this growth. And they were about 9 people, and they were all white males. And I said, I can't help but notice your company started. You're providing a service where your user base is about 90% female. but your organization right now is 100% male.
Oh,
I said,
gosh.
can you tell me a little bit about that? And they're like, well, believe it or not, we tried to hire women. We couldn't find any.
Do you hear
And
that
when
a
we got
lot? Do you hear
investment,
that a lot? Like
I
we have binders
hear
full of
that
women.
all the time.
Yeah.
And there are thousands of women in tech. It matters how you do outreach, how you kind of assess candidates, what you're looking for, whether you're looking for cultural fit and what even that means to you,
yeah.
how you're going about referrals. And there seems to be in some companies sort of this juxtaposition of diversity and trust. They're almost, opposing forces.
Interesting. Yeah.
And this wasn't something I was looking for. It's just I was very curious about, did they notice this? And they did. And they said, diversity and inclusion is important, but growth is more important. And when we have time, we're going to try to address the issue. And right now, our investors are pushing us to do X, Y, and Z. And diversity is interesting and important, but not enough for us to do something about.
Can we
and
talk
I thought
about?
That was really curious.
Yeah. Can we talk about how the system sort of creates that mindset, or that sort of? I mean, that has to be a response to a certain set of incentives. Can you talk about that premise?
Yeah, and to me, it's fascinating because one, it says diversity is a nicety. It is not related to your growth strategy. In fact, it can, in some instances, even be seen as a distraction, right? And the reward is growth, a growth at scale, and profit and a return on investment for the investors. And the ideology there is that you're going to get that notwithstanding diversity. So the ideology for me has always been sort of trying to understand why there's this opposition to diversity of somehow getting in the way of things or creating a burden that is unnecessary.
Framing it as a cost is such it's just such
Exactly.
problematic framing.
It's like an information cost that you don't have time.
Or even in this sense, like an operational cost, like this, once we actually are, a growing business, we can afford to spend money on diversity. It's just backwards. And you could see that with that framing, we're not going to make any progress we make is going to be limited.
Exactly. And that is something that comes from investors. It impacts entrepreneurs. And so it's really trying to understand, well, where is that point for inflection for change? Is it changing the mindset of the entrepreneurs who have now taken investment money and potentially feel beholden or really, an obligation to kind of follow through with the requirements of the investors, which, to some degree, they have obligations. Is it changing the frameworks that investors think about in terms of how they invest their money? Is it sort of thinking about their investment logic and thesis and saying, it's really based on these assumptions and maybe we should talk about those assumptions and see if they hold? Or, we can go another level and say, hey, is it the LPs? Is it these large partners, these institutional investors like foundations who are trying to also get a return and kind of not putting much pressure on the investors that they choose to do anything with diversity and inclusion, which becomes really interesting when you talk about huge pension funds.
Yeah. So talk more about that. Like draw that out. Why is that a particularly problematic area?
Because pension funds, particularly in states, are technically taxpayer money. So what you're doing is thinking about how that money is being deployed. One, to investors who may or may not be investing locally, and two, investing in a manner that doesn't really represent the interests or the identities of the people who are putting the money in. So there's sort of a very narrow benefiting that happens, interestingly, around how taxpayer money gets deployed and invested. We're seeing some conversations around this. A lot of VCs that I've spoken to will say, I am under serious pressure to have a return for the large, folks who have invested with me. Go talk to them. I'm not the problem.
Right.
And then you talk to LPs and they're like, listen, we feel pressure to have a certain kind of return that our, shareholders expect from us. So then it kind of is this tautological argument of like, who's actually responsible for doing anything? And when you bring up sort of regulation around like an X percentage of funds must have an X percentage of their capital deployed in these kinds of, startups like women or minority led or some sort of group, that's incredibly contentious in the US. Although if you don't set any metrics or goals, you will never reach them. Mm-hmm. So we don't see change organically in the US. Although right now we're at least seeing some conversations around racial equity.
Absolutely. And thinking about that, I mean, we start to see not only these conversations happening, but there's some data that have demonstrated that, in business, you can get better outcomes with more diverse groups making decisions and more people represented in conversations. In the venture space, do we even have large enough sample size to draw similar conclusions? Like, do we have evidence that or do we even have enough observations to have evidence that diversity and inclusion with venture capital can make a difference in the quality of the venture investments?
Yeah, that is almost, the newest conversation in VC, because so much of VC is in a private space. And while VCs kind of have been grappling with this issue around D&I for a longer time, there's sort of real hesitancy to be the first to say, I think it's important and here's how we're committing to it. But at the same time, there is some small scale change in existing firms really rethinking their approach to how they assess and get referrals, how they on-ramp more diverse partners and keep them, and how they think about the ways in which they deploy their capital. Are they putting aside a certain percentage? So what I'm doing at the Venture Capital Inclusion Lab at Brown is we are actually following up with all the firms that signed the 2016 NVCA Diversity Pledge under the Obama administration. The National Venture Capital Association had a diversity pledge, and a certain number, I think close to like 45 investors and investor firms signed it, pledging to do something around D&I. Mm-hmm. And it's been around, 4 or 5 years since that. So what we're doing is following up to see what has happened, what has changed, and what are some best practices. And we're seeing some bright spots.
Awesome. What are we seeing? Can you give us some examples of success stories?
Yeah, we are seeing sort of intentionality play out in, one, how firms are thinking about bringing on partners. So much more intentionality in partnering with historically Black universities and or creating internship programs, fellowship programs in partnership with either other firms or with sort of corporate entities. So there's a way to make sure that this person is paid, and then bringing them on. And then the next level is sort of really reassessing how they promote partners into positions of making decisions about investments. So real sort of cultural assessment, I would say almost like an internal audit of who they are as a firm. And then the next one is really looking at their investment thesis and how they're deploying capital and whether or not their returns are in line with what they expect. And for those firms that have made changes, the outcome has been positive. When they have started investing intentionally in diverse founders, it has been positive. And the way they get to those diverse founders is by building a much more intentional and diverse network through, like I said, HBCUs and other sort of programs that allow them on-ramps, setting up office hours to intentionally take the time to meet with people they would otherwise not. And really kind of attending events and understanding the language around racial justice and equity so that they are aware of how their actions kind of fit into the bigger picture. So there is some movement, and this is besides sort of, dedicated funds that have been set up by like Black entrepreneurs, like sure. Black VC, Harlem Capital. There's a whole plethora of those, but the number and amount of funds deployed by them are still quite small.
Yeah, I think so. It seems like what you described kind of two mechanisms for addressing the problem. One, you've got potential policy prescriptions, whether it's a pledge that organizations sign or investors sign. It could be a little bit more explicit policy. Maybe there's policies that governments or regulators can come up with around lending institutions or something like that. But then this notion of a venture fund that's specifically designed around investing in a diverse array of groups, however they choose to operationalize diversity. What are we missing? What other sorts of interventions are out there?
Yeah, and we're sort of at the tip of the iceberg and sort of really rethinking this idea of how do we trust people with our money? Due diligence tends to confirm our biases. And so really looking at the due diligence and how that might, beyond sort of the legal prescriptions of what the give and take looks like, how do we come to trust people? I think some conversations that are needed around how we end up trusting people, especially if we're going to invest in them. And there's a lot of unspoken assumptions around the ways in which our background and the background of the person, their identity, their networks, their education have an impact on our ability to trust them.
Right.
And our ability to understand the market that they're trying to tap. For example, again, I'll use Boston. I've done substantial research there. There are a lot of white investors who, while they like the idea of diversity, they don't understand some of the markets that are available to invest in because they simply have no experience. So you'll have an example of sort of a young woman who is bringing technology together with the beauty industry to have sort of an Uber for Black beauty, right? And the reality of it is white investors don't understand the market, don't understand its potential, don't think it's worth investing, when in reality, it's a huge market, right? So there's sort of this misunderstanding or lack of information. So they choose to not educate themselves or reach someone in their network who can maybe help them translate this.
Right.
So instead they pass on the offer. And then the narrative is, there's not enough founders of color that we can invest in, when in reality, you were not asking the right questions and you were not educated in the market to understand the potential.
Yeah, the mechanism flows the other direction. Let's talk a little bit about Montana, because what's happening here, at least in Missoula, is a real influx and groundswell of technology startups. I mean, we got Illumina, we got Submittable, we got ClassPass, we got Onyx Maps, some really interesting companies in various stages of venture funding. Some sort of have arrived, others are sort of on the cusp, and anything in between. And we have a particularly homogeneous state. We're not the whitest state, but we're the least Black state. We do have a significant percentage of the population are members of the tribal organizations, and wondering what you know about how some of these forces manifest in more rural areas or areas that haven't traditionally been havens for tech investment.
Yeah, so I think New Hampshire is the whitest. Montana's up there, though. It's like 89.9%. I looked it up. About a third of business owners are female. And given the population, only 5% are minority business owners. But what is happening, interestingly, is there is a shift from the coasts to the middle in terms of investors and tech startups coming, as you mentioned. And one of the most recent things that's happening is as investors move into areas where they are still interested in investing in tech, it still tends to be tech, because they realize all you need is a person, an idea, and a cloud computing opportunity. They start building infrastructure and they start bringing people. And so one of the examples is an investor who actually moved to Montana and is interested in sort of funding startups in the tech space there, but is funding them in a manner that requires them to take on the similar kinds of problems that we saw in the other coasts. So similar debt structure, similar growth aspirations, and also bringing on board members that are known to this investor from other previous investments.
So sort of bringing the rules of the game from Silicon Valley to Montana. Is that what you're describing? Okay.
Exactly. It's sort of an institutional theory, right? Like
Yep.
it's a great example of setting up an infrastructure and a set of norms and values. If you're into institutional theory, this is how the rules of the game are being created,
Exactly.
except they were not built in Montana. So what you're going to see is probably a replication of many of the problems we saw around not only equity, but also local development. How are we going to think about that if the growth aspirations are not necessarily in the interest of the community, but they're much more global with an eye towards returns for investors? So it's really a question around the whole of the VC industry and what they're doing, with it playing out in a very local and personal way in these communities. The other thing you'll see is as tech moves in, real estate prices go up. You tend to get more immigrant population, particularly from Southeast Asia, moving in. With engineering, that tends to be sort of also what happens. And you'll see sort of some tensions flare up because people are not accustomed to each other's culture or habits and have underlying sort of stereotypes and ideas about who people are in the world. But on the flip side, I think it's a real opportunity to understand that the U.S. is actually becoming a majority minority, state overall over time. And last year was the first time that the under 16 population was majority minority.
Mm-hmm.
So over time, the U.S. is becoming much more diverse in terms of race and ethnicity. And rather than seeing it as sort of a threat, a real opportunity to kind of be a vanguard in how there could be new opportunities and new markets emerging, particularly in areas that were much more homogenous.
That makes sense. And, what you're describing there, bringing the rules of the game to new areas like Montana, it almost seems like a very sort of colonial approach. Like we know what works best and we're going to take our rules and impose them upon others. Yet at the same time, opportunities for us to sort of, if we know that's coming, we can take active steps to kind of not necessarily mitigate or resist, but just understand those forces and maybe create different systems and different structures.
Absolutely. And I think that's sort of smart governance, right? And a way to not create disenfranchised communities who feel that, people simply moved in and started making money in communities that actually need that support. The ways in which we think about wealth in rural communities is a little bit different. It's not only financial, it's human, it's social, it's community driven. And I think understanding that as another source of capital and that not everyone needs VC money.
Well, that is for sure. Banu, it's been fantastic learning more about your work. I want to kind of be respectful of your time. It's after 5:00 in your home of Providence. But I do have one more question. So you testified about all this stuff in front of Congress last summer, is my understanding. I read your testimony. And but during the Q&A, what was the wackiest question you got? I mean, some of the questions that come out of the mouths of some of these members of Congress lately are just head scratchers. Did you get any head scratchers?
I didn't. I'll tell you, it was one of the most nerve-wracking moments in my whole career.
I'm sure.
But at the same time, what made me really happy is that it is one of the only functioning bipartisan communities right now.
Okay.
So it is by one of the only functioning bipartisan committees. So, and so to me, that speaks volumes about the value of D&I in investment, that it is something that everyone can rally around, which I think makes it much more powerful.
Well, and again, like we started the program, you look at those numbers and they're just so glaring that you have to, it's a problem you can't ignore. It's like one of those things that once you learn about it, you can't ignore it.
Right. And it really impacts sort of the future and competitiveness of the U.S. in the long run. So, if out of no reason but economics, it's still worth pondering and fixing.
Right. We can all argue from a place of self-interest here. Banu, such a pleasure to chat over Zoom here. Thank you for sharing your time and wisdom with us. You're going to engage with our one of our advisory boards a little later in the fall, and I can't thank you enough in advance for that. How can people who want to learn more about your work find you online?
Yeah, a couple ways. So I'm always happy to receive emails. My email is Banu_Ozkazanc-Pan at brown.edu, or you can look up Banu and Brown University, and there's only one of me. The other way is through the Venture Capital Inclusion Lab. It's vcinclusion.com, and you can reach me that way.
Awesome. Well, Banu, thanks so much. I look forward to our next conversation.
Thank you so much, Justin. It was truly a pleasure to be here, and I look forward to our next conversation.
Thanks for listening to A New Angle. We really appreciate it. A New Angle is underwritten by First Security Bank and Blackfoot, with support from the University of Montana College of Business and Consolidated Electrical Distributors. AJ Williams is our producer. Jeff Ament, John Wicks, and VTO made our music, and Jeff Meese is our master of all things sound. If you have any questions, suggestions, comments, insults, whatever, please email me at anewangle@umontana.edu. If you like what you heard, tell your friends about us. Thanks a lot, and see you next time.